A world powered by the blockchain is being formed right in front of our eyes. Experts are calling it the Internet 3.0, the next digital revolution. It's leaving many investors and even institutions looking for a path to take an early position in this massive opportunity. Bitcoin, Ethereum, Ripple, Dash, it's all speculation at this point. But what is certain is that the most profitable businesses for cryptocurrency and the blockchain is in the actual creation of these coins. This is why some of the top early adopters of Bitcoin, blockchain miners, fund managers, and even billionaires have come together to create a new vehicle to invest in the blockchain core itself. Get immediate access to this new company by going to crushthestreet.com/Bitcoin.
Hello everyone and welcome into crushthestreet.com. Got a new guest on the line. Pretty excited. I got to meet Paul Snow, the inventor, creator, and principal founder of Factom. He's now the chief architect at the Austin Bitcoin meetup a week ago. And now we're doing a call, and I get to bring Paul Snow's knowledge to everyone here today. And he's local. He's in my hometown here of Austin, Texas. And this guy's IQ is off the charts. And we're going to be able to pick his brain today talking about Bitcoin, cryptocurrencies, and Factom. And I want to let everyone know that the Texas Bitcoin Conference is coming up here October 28th and 29th. In Austin, Texas, and Paul Snow is the chairman for the conference, so it's pretty cool. He'll be there. I plan on going as well. But without any further ado, Paul, thanks for coming on the show with me today.
Well, it's very exciting to be on the show, Kenneth.
Well, what's more exciting is what's going on in cryptocurrencies. Last I checked, Bitcoin has almost reached its all-time high once again. I think last week it was closer to 4,000, and now we're almost banging up against 5,000 here. So let's just get your thoughts on what's going on at the moment in Bitcoin. Why are we seeing such high prices at the moment?
Well, I suspect that Bitcoin is going up largely because there is a demand and there is a limited supply. It's pretty much the pure supply and demand model. Now, in the past, when Bitcoin would drop, there was a lot of feeling by many observers that, oh, well, that was it, and it's all going to fade away, tulips, 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 and, all this kind of stuff, right? But every cycle of Bitcoin coming and hitting an all-time high, maybe consolidating for a while, then coming up and hitting an all-time high again, every cycle has really convinced the market that this isn't really in a bubble yet. And there are some very good technical reasons why Bitcoin is valuable to some people, and it just doesn't take that many people to push the price up, to push that value up. And that's really what's happening here. Now, we could talk about who those people are and what characterizes them and what we think is going to happen in the next quarter and 2 quarters. But all that is more detail on the general observation that there are more believers than detractors, and that drives the price up.
Certainly, and I think it's really interesting how the run-up is happening as we approach the November 2x hard fork. And I'm wondering if people are anticipating some similar moves that we saw here in August with the Bitcoin Cash fork and the mayhem not setting into Bitcoin and Bitcoin surviving and ultimately thriving after that hard fork. So I'm wondering if people are a little more confident going into November, and that's why we're seeing a little more strength here.
I think that's very true. I mean, a lot of people are going to want to be in Bitcoin prior to a fork because that gets them extra coins. And if I were to take the Bitcoin value at 4,800 or so as I'm looking at it, and I add the Bitcoin Cash tokens, which is somewhere around 320, we're well into the $5,000 range for tokens that were purchased prior to August. And so a lot of people are going to be looking at this thinking there's going to be a fork, and I want to have my tokens before the fork so that I can have both my Segwit 2x tokens and my Bitcoin Core tokens, regardless of which one ends up being called Bitcoin on the other side. Now, there is another analysis, and it's the one that I tend to hold with, that the Segwit 2x fork that right now, the last I saw was tentatively scheduled or predicted to be about November 19th. It's fixed by the block height size, because every block gets an incremented value, so they get to numerically identify a block. And these blocks are roughly showing up every 10 minutes. So the closer we get to the activation of Segwit 2x, the better our ability to predict exactly when that will occur becomes. Basically, the closer we get, the less uncertainty there is. Anyway, so November 19th, and this particular fork is very different from Bitcoin Cash. Bitcoin Cash, from the developer side of that token, was admitting from the beginning that they were going to do a hard fork, that they were going to go off in their own direction. So they put in something that's called replay protection into Bitcoin Cash. And that meant that despite the fact that both Bitcoin and Bitcoin Cash use the same addresses, a transaction that you build on a Bitcoin Cash wallet and submitted to the Bitcoin Cash network cannot be replayed on the Bitcoin network, and vice versa. So you must consciously spend Bitcoin even after the Bitcoin Cash split, or you have to consciously spend Bitcoin Cash, but you can't accidentally send 3 Bitcoin Cash tokens to me because I'm a nice guy, and accidentally also send me 3 Bitcoin tokens because I'm a nice guy. Because, I'm nice. I might be 3 Bitcoin Cash tokens nice, but I'm not really 3 Bitcoin tokens nice. You know what I'm saying? That would be $15,000. Nobody thinks I'm that nice. So now Segwit 2x is not going to have these protections. And possibly there was an attempt to put a opt-in protection for the Segwit 2x chain, which means that not every transaction in Segwit 2x would be protected, but if you created your transaction a certain way, then your Segwit 2x transaction could not be replayed on a Bitcoin Core chain, okay? And that meant that Bitcoin Core transactions would be effectively insecure, because when you spent your Bitcoin Core tokens, you might accidentally spend your Segwit 2x tokens. But if you're spending your Segwit 2x tokens, you can do it safely and not be afraid of your Bitcoin Core tokens moving.
So, Paul,
when you didn't need to.
So, Paul, are you saying that we have the safety in going into this knowing that there is going to be protection, or should we be worried about the lack of replay protection going into this? Because if that's the case, we don't have a safe form of transacting here, right?
Right. Well, the Segwit 2x guys are banking on the fact that they're making Segwit 2x safe without protecting Bitcoin Core, without protecting the current blockchain. This is an attempt to replace Bitcoin. Bitcoin Cash was never an attempt to replace Bitcoin. So this is a huge drama in the Bitcoin space. And one of the reasons why we're going to be covering Bitcoin drama in the Texas Bitcoin Conference is that these are real complex issues, and day after day after day, new information sheds more light on what the risks are, what the potential advantages are, what the opportunities are, and what's going to happen. Now, I'm going to go ahead and make one other observation about the Bitcoin and the Segwit 2x fork. Bitcoin Cash, one of the aspects of it was they added code to adjust the difficulty, because one of the problems with forks is you have to have exactly, nearly the same hash power that you had before the fork. You have to have that same hash power after the fork if you want your coin to perform. And that means that really only one of these tokens, Bitcoin or Segwit 2x, only one of these tokens can be viable after November 19th. The other token, let's say there's only 20% of the hash power on Bitcoin. That means that blocks, instead of taking 10 minutes, they're going to be taking 100 minutes, 5 times as much time, because they only have 20% the hash power. They basically have to work 5 times harder to build a block than they did prior. And then the difficulty, that gets adjusted every 2 weeks. That's 2 weeks in block time. So that means that's 2 weeks with 10-minute blocks. With 100-minute blocks, you're talking about 20 weeks, 10 times as much. So it not only has no throughput, it can't correct itself very fast. And so I'm going to predict that only one chain survives out of November 19th. So it's not going to be a hard fork. There is some slight chance that the Segwit 2x guys, if they fail, might hurry up a difficulty fix, which would be another hard fork, and then they could survive and go forward. But, the Bitcoin Core guys, if they're on the losing end, I don't see them doing anything. I really see the developers pretty much kind of having to decide. They're going to have to make some hard choices if they don't win the hashing game.
Do you have any inclinations as to what you think might happen at that juncture?
My expectation is that Bitcoin as we know it drives forward, and Bitcoin Segwit 2x, that project, frankly, if I was going to bet, I would bet that they're going to fail and that coin just goes away. Then there's some slight chance, if it doesn't do that they hurry a hard fix to fix difficulty and they continue to survive. But if they don't have that in place immediately, again, they fail and go away. If Segwit 2x wins, pretty much the developers that are on Bitcoin Core, for the most part, abandon Bitcoin as a project. I mean, so many core developers have come out and said that that's what they will do. Wow. Will that be fatal to Bitcoin? No, it won't be fatal to Bitcoin. Bitcoin will continue going forward, and some of the developers will fold back in. And then there's plenty of other very, very smart people that can come in and continue working on Bitcoin. But I think that of all the scenarios, that is the least likely. I don't see Bitcoin Core going away.
Yeah, no, I appreciate the insight on that, and I think it's very interesting. And it's one of those things where we do have to acknowledge that things aren't certain for the future, and holding on to Bitcoin or holding on to any of the cryptocurrencies as, let's say, gold or real estate or something like that, where you have a little bit more of a certainty as to the future. Well, it's not exactly on equal playing fields. In my opinion, maybe you would agree with that. I wanna transition over. One of the things that we were talking about last week was mining and the hash rates, and I want to shed some light on this. Back in the day, you can mine off of your laptop. Maybe it was profitable, maybe it wasn't, but you probably, if you did it at the right time, you might be a multi-millionaire now just with what you did off of your laptop computer. Now that's not true. The dynamics are changing, and really the only profitable entities are the large ones with great computing power. So if you would kick us off here, what is the current environment and who's profitable right now mining Bitcoin?
So we were talking about mining pools and what it takes to be profitable. It's probably not accurate to say you have to be a big miner to be profitable mining Bitcoin. What is required is access to reasonably decent mining hardware. And right now, the supplies of these ASIC chips, which are basically specialized chips for Bitcoin mining, these chips provide anyone using them with a great advantage over someone that's just using a computer or graphics cards. Okay, so they make way more money. Those mining chips are not easily acquired, and a lot of times when you do acquire them, they're not as good as some of the big mining pools are using. So that's really what's making it hard to mine profitably as an individual. That and the fact that the cost of power is a big factor. China has a huge advantage because they have a lot of waste energy. And what is waste energy? Waste energy is energy that's being produced but doesn't have any real use. It's a hydroelectric dam way out in the country, far from any power grid that could use the power. Or it's a bunch of solar panels that are in a warehouse because they could put them out there, but when the sun comes up, it produces way, way more power than the grid can accommodate. And then when the sun goes down, of course, no power. And so there is a certain level of solar power that can be fed into a power grid that makes sense.
Sure.
And beyond that, it's pretty much waste power. So the question is, what do you do with waste power? Well, you do what they did with the solar panels. You just leave them in a warehouse. Or with the hydroelectric dam, you just let the water go through the dam and not through the turbines. But if you run them through the turbines, because they're just sitting there, and you run that power through Bitcoin miners, you're basically converting this waste power into money, into Bitcoin. Okay? And if I set up the solar panels and I take the excess of the solar power and I run it through Bitcoin miners, I'm taking waste power and I'm turning it into money. China isn't the only place that has a lot of waste power. Everywhere we put renewable energy, like hydroelectric dams, like wind, like solar, you're going to have cases where you have waste power, where you're producing more power than there's a market for. And as we move to almost, 80% or 90% renewable energy, which we may be at in 20 or 30 years or something, a lot of that waste power has to go somewhere, or you just have to suck on the costs. Well, cryptocurrency will be a place that waste power can go. And this is going to be a leveling feature of the cryptocurrency. The last thing is the chips. The chips need to be on spec, on par with the other chips in the industry. That's going to occur when a second layer. I don't believe the first layer chip maker will ever make mining chips. Second layer chip makers will. And by that, I mean, first layer is Intel. There just isn't anybody else. They're the only ones that own their own fabs, all the way up to the chip designing, all the way up to the marketing. They have the whole full vertical all under their control. They know the process. They understand the process. They schedule the process. They are the level 1 chip manufacturer in the world, and there is nobody else like them. Level 2 are very, very, very competent chip designing firms like AMD, NVIDIA, a bunch of those kinds of guys, and TI. And these guys can design chips, and they can contract with fabs, and they can get those chips produced. When the second layer guys begin to create Bitcoin mining chips, then those chips become a commodity. There is no advantage to some firm that's done a better job creating an ASIC than anybody else, and you get a more democratization, if that's a word. Democratization of the technology. I just for some reason can't say the word right now, but everybody's on a level playing field, and once they're on a level playing field, once there's a decent supply of waste energy, you're going to see a more distributed and fair mining picture for Bitcoin and other cryptocurrency. But I also will predict that the mining will spread across all the tokens, and I also will claim, because I'm going to reference a point you made earlier that gold and all that is better. I will claim that Bitcoin is better. And the main reason that Bitcoin is better than gold is the only reason gold is valuable is because people want it and it's scarce and you can buy it, you can put it in a safe or something, right? But there is a real custodial and transportation problem with precious metals. You can't really own a lot of it before it starts to become problematic.
Sure.
Bitcoin can be done with cryptography. You can have a single sheet of paper that has millions of dollars on it, and you can have really, really strong cryptography so that you're even protected against seizure or theft of those tokens. I'm not saying it's easy, but it can be done, and it's going to be getting easier, and it's going to get better, and it's going to be more consumer friendly. Companies like Rivets, who's one of our sponsors at Texas Bitcoin Conference, is creating that hardware software interface, and they're using trusted computing chips that are already in your laptops and phones to secure your cryptocurrency and making that stuff safe and theft proof and idiot proof. And
that's what we need.
Yeah, the idiot proof is big. Okay, the idiot proof is big, and that's where we have to get. And I have great hopes that we're getting there.
Sure, and I don't disagree with you at all. I guess I was speaking more to the uncertainty of what we're seeing in November, and if we do have a problem.
Oh yeah.
How could you? There's no you don't deal with that sort of uncertainty where gold is going to fork and you don't know which gold to hold. I mean, gold is gold, and that's all I was basically saying. But the technology behind cryptocurrency, where things are going, and the utility of it. Oh my gosh, it's so powerful, so revolutionary, and we're going to get into some of the different avenues that it's going down. And Factom is certainly opening up a major door for that, which is really exciting. So one topic before we get into that I wanted to touch on, which relates to mining, is the hash rate and Bitcoin's hash rate going up and down. And we know that miners are driven by profit. So just can you give us an idea of why hash rates fluctuate so much, and what is the implications on the network when that happens?
Well, the hash rate fluctuates because of a lot of things. You can have a storm that knocks out, some significant miners, and just like when a hurricane knocks out some refineries, you can get a drop in hash power, okay? Another thing that can happen is another token starts rising in value, and if the proof of work behind some other token is compatible with the hardware, then I can shift my hardware from mining, say, Bitcoin, and begin mining some other coin. Okay. Now, not all coins work like that. For instance, Litecoin uses a completely different proof of work than Bitcoin. So I can't shift my Bitcoin proof of work to mine Lightning. But I can shift the Bitcoin proof of work to mine other tokens. Off the top of my head, I'm not going to name any because I can't quite remember who uses SHA-256 hashes and who doesn't. But there are a lot of coins that do. And so the hash power will move and chase the value of the tokens. Because if I'm hashing a token that has a higher return because the value of the token's gone up, but the hash power hasn't, if I mine in that coin, I make more money for the electricity I'm spending and the time I'm spending. I just make more money. If the value of that token drops and there is a lot of hash power on that chain, now I'm having to work harder to compete with everyone else that's hashing. I'm working harder to get my reward, but the reward is worth less. And so I will end up wanting to shift my hash power to another token. Bitcoin has been a big winner, and so it's largely pulled most of the hash power. But the other thing about that is that that hash power is way in excess of what Bitcoin absolutely requires to be secure. So as that hash power rises and falls and all that sort of stuff, it doesn't really impact the security of the protocol. It just means that sometimes the blocks are longer, because less hash power means it takes longer to create a block, and it takes and then if the hash power goes up, then there's some blocks that get completed quicker, but it averages out in the end. And I'm sitting here looking at the hash power chart, and it has been pretty volatile since early September until now. Actually, it was pretty stable through the August 1st time frame, which you wouldn't necessarily expect with Bitcoin Cash.
So Paul,
anyway.
As it's kind of like that crypto economics that I don't know who came up with, but just the nature of cryptocurrency and people being incentivized to do the right thing. So when the price goes up, people are incentivized to secure the network and bring in more hashing power, and it's a really powerful form of free market economics. And I think that's a really cool thing. So there are ways for people to arbitrage, I suppose, to go from in and out of other currencies. But is that a problem then? I guess you touched on that. Is that a problem for Bitcoin if we do have miners going in and out of Bitcoin to mine different things? Or maybe not a short-term problem, but is that a medium to long-term problem?
No, I don't think it's a problem at all. And I do think that the nature of that process is a kind of a leveling effect across all the cryptocurrencies, so that when I start looking at a dip in hash power or a rise in hash power as a percentage of the total hash power, it just becomes less and less over time as the hash rate goes up. There's kind of another aspect that usually gets raised here, and that is, are we wasting energy? I would assert that when you look at these great big heavy armored trucks that drive around paper, and you look at these skyscrapers that are in downtown with various bank names on them, and you consider how many people are employed that walk up and manage your deposits and manage your withdrawals, at a teller or something like that. You have enormous amounts of energy used in the what I tend to call the legacy financial network inside of the banks and whatnot. Bitcoin cuts all of that out, and yes, hash power burns up power, but I predict that as we go forward, it will largely be waste power. So I am not concerned about the amount of power that goes into the hashing, and I don't see it much as a problem that it varies a bit. It has mechanisms to account for that.
Paul, you are on the frontier of this cryptocurrency blockchain technology, and you guys started Factom and the data storage. And give us the background and an idea of why this is so, such an incredible technology, and what does it offer to companies and to people in the future? I mean, one of the things I've been saying here at Crush for some time now is the Jetsons could not have anticipated what we're seeing now with blockchain. And here we are with going down so many avenues that we would not have been able to conceive just that many years ago. So where are we with this?
Well, I mean, I assume largely with Factom and its applications and basically other applications besides currency and the blockchain. Is that accurate? The question?
Yes. Well, and in regards to Factom.
Oh, with regards to Factom, sure. And so what we're doing at Factom is we're acknowledging that there are a lot of asset problems that a coin models, things like coupons or airline miles, customer reward points. Those can all be modeled as a token, and maybe if you created a cryptocurrency to manage consumer reward points, then consumers would not only be able to easily acquire the reward points, but also be able to trade them or accumulate several people in order to perform some function. And furthermore, the store that is issuing the reward points can view that as creating something from nothing and giving it to the consumer, and there's no debt involved, because the value of the reward point when it comes back can be the market price for the reward point. So it's no longer a debt on their books the way reward points are now, because reward points now are basically a promise that you're going to give some service or some discount in the future because you have these reward points and you're going to cash them in. If all I'm doing is giving you a token and washing my hands of it and letting the market determine the value, and I accept them later and cash them out for cash, then basically they're not a debt. I'm just using the reward point as something you trade.
Paul,
okay, that's great.
I was just going to jump in there. So no, I didn't mean to cut you off. Go ahead.
Well, that's great, but most of the problems in this world aren't coins. So that it's great that I can identify a few interesting things like that are in the real world that people are that recognize that maybe cryptocurrency can take over. But most of the problems in the world aren't coins. For example, when I do loan origination, it's about the documents, the information that I pull from those documents and place into an application, the reviewal process, who reviews, who approves, and creating effectively, you could conceive of creating effectively an audit trail inside of a blockchain that is immutable, unchangeable, and permanent, that provides perfect data integrity of the decision process all the way through. Now, when a mortgage company gets audited by a regulator, you can simply point them to the blockchain along with a set of documents so that they can match documents to some hashes that are in the blockchain, because you don't want to put the actual documents to the blockchain. That would ruin privacy, right?
Right.
But you want to put hashes of those documents. So I give the documents to the regulator. They match them up with a hash. They see the timeline. They see the data that was pulled from what documents, and they validate and verify that the loan was originated properly. They give it the rubber stamp, and now this loan is you pass the audit, and it's all golden. this is one of the most expensive things now, because what happens is we hand them a bunch of documents to prove that we did loan origination correctly, and they have to, from those documents, try to reconstruct what happened, who did what, when, and where. Or they trust a database that could have been altered by anybody. And so that has driven the price of loan origination, that auditing process that has occurred a lot more now than it did prior to 2007, 2008, because of all the auditing, loan origination problems that we had prior to 2007 and 2008. So that's pushed the cost of loan origination today up by a factor of 4. In other words, buying an average house today prior to 2007 might have cost you $2,000 to $3,000. Today, it's going to cost you anywhere from $8,000 to $12,000 to originate a loan. That's a lot for the consumer to pay, because it does come out of your pocket. That can be solved with the blockchain. And there's so many. I can go into managing legal documents to provide timelines for legal things like wills and those sort of things. You can talk about audit trails for inspections and business processes. If we had those kinds of audit trails in Deep Horizon, the various parties that were responsible for drilling that well and maintaining it correctly could have been managed, and problems could have been identified early, and perhaps we would have avoided a disastrous spill in the Gulf of Mexico. Because cryptographic audits means every party involved knows they're on record. And so what you can measure, you can manage.
So I guess it's just so hard for me to wrap my mind around, because Bitcoin is a ledger of just a simple transaction. You know, a little bit goes down in my account and a little bit goes up in someone else, and that's the extent of what happened. And that kind of makes sense that it can happen on a ledger, but to attach a change in the blockchain to a whole booklet, a whole file cabinet worth of data, it's just seemed I just don't. It's so hard for me to wrap my mind around the ability for the blockchain to keep all of that information secure and to ensure that it's not changed, it's safe, nobody else can see it, but at the same time we can trust that it hasn't been tampered with. And maybe you can just shed a little more light on that for me.
Well, the way Factom works is that all the data that goes into Factom every 10 minutes gets all combined together and hashed together in something called a Merkle tree. And a Merkle tree simply looks like your typical tournament bracket, where I combine hashes and combine hashes and combine hashes. We all recognize that hashes basically represent a unique fingerprint. Mm-hmm. For all practical purposes, a unique fingerprint for any digital thing, whether it's an address or a movie or an encyclopedia. If it's a digital thing, I can hash it down to this hash that's 32 bytes.
There it is.
And that will be unique to any other document or digital asset that we might hash. And thus I can combine those two together in my Merkle tree tournament bracket, and that will result in a hash, and I can combine that with some hash of some other combination, and just down all the way down until you have the winner of the Super Bowl, right? And that's the hash that goes into the Bitcoin blockchain. Now, what about that Merkle tree? That's great. I can essentially secure tons and tons of data with a single hash. That's great. But what I also need to be able to do is pull out sets of that data and have cryptographic proof that everything in that small set is the only data that applies. Mm-hmm. This gets to you're like, how can I just see the audit trail for one document when there's got to be seas of things that are going into Factom? And the idea in Factom is that you create a user chain of your own unique ID and you put your data in that chain, and you sign those entries, or put whatever validation verification layer on top of that data that you need so that you can verify it later, and you write it into your chain. And now when I query a Factom node for the data that's in a chain, that Factom node can give me only that data.
Wow.
And if I ask for any of those entries, where's the proof into Bitcoin, it will give me a receipt of that data all the way to the Bitcoin blockchain. That's basically how I can track the Saints when they play and they make it to the Super Bowl. We've only had one Super Bowl because really it's the Saints and a bunch of who-dats. I don't know who's other teams. I don't have to worry about who everyone else that plays. I only care who the Saints is compared with through the Merkle tree. So as long as I have the hashes that combine with the Saints at every level, all the way through the tournament until I get down to the Merkle root, that's all I need for cryptographic proof that the Saints is part of that set, and it's secured by the Bitcoin blockchain, and it is in the proper order in that entry block.
That is powerful.
That chain. And so it's a bunch of cryptography in order to not just look at a chain as one thing, but to look at it as sets that the user can define and build, and the user can populate with the data they want, and then they can make connections between chains, and they can build structures. And this is all about data integrity that proves that your data is correct.
That's powerful. Paul, our interview is going on 40 minutes here, and I can talk about this for another hour here. But I'd like to just kind of close it out here with one more question. And then, just because everyone wants to know about the price and the opportunity, but the fact is this is technology. This is technology despite what the price is. You can interact with Amazon by buying something there, or you can go and buy the stock and never cross paths. I just want to ask you, I know a lot of people are going to wonder about the price and the opportunity, maybe what businesses are going to be using Factom, and just what's going on this front.
Well, we're talking to, we have announced and talked about a number of projects. One of them is DHS, a Department of Homeland Security. You may have heard of them.
Yes.
They have a problem where they secure the borders, with cameras and other sensors to ensure that people are not crossing the border in remote areas. Okay. Now, the problem with sensors and cameras and other things is that when somebody asks them, where are all the pictures you took on July 3rd of 2017, and they provide that data, they don't actually have any cryptographic proof that they provide all the data, and they have no cryptographic proof that they haven't modified anything. Okay, so and then they have a problem because people that cross the borders are actually, really, they're not stupid. They have occasionally spoofed devices so that the camera that they thought they deployed has now become a camera that's supplied by the traffickers or the people crossing the border, and now suddenly they're not getting the data they're supposed to get. They get a different scene, or it's been moved from one location to another. So we are working to register the devices with cryptography and to hash the data as it comes in and placing that into a chain on a per device basis, so that the Department of Homeland Security can say, yeah, see, these are the pictures that were taken by this camera on July 3rd. Here's the cryptographic proof. They're signed and they're sequenced and they're hashed. They haven't been modified. There are none outside of this set. This is an automated process. We're even pushing the process into the camera. So that's one thing. Another thing that we're doing is the Bill and Melinda Gates Foundation is interested in improving medical care in developing countries. And so we're working to create hashes and keys behind medical data so that when a patient shows up at a clinic, they can track back and find medical records, even though that patient may have been treated by a government agency in one case, a relief agency in another case, an NGO in another case, a disaster response team in another case. As long as they're using this tool with very, very little resources, we can create a audit trail that at least tells us where to pull the medical records, and once pulled, then they can be handed from one group to another so that you have redundancy, so that those medical records are available, cryptographically provably the right records for that set, and with some biometrics prove that this is the patient that goes with those medical records. And so it's less about privacy here, because you're talking about people that can literally die if you don't actually know how they've been treated for HIV or several other diseases. In other words, double treatment for some of these diseases is fatal or can be fatal. And so you've got to know how they've been treated in the past to give them the care they need. And so that's our focus at this point. We are also talking to some people that I can't really talk about, some banks and some insurance companies. We're working with companies in the crypto space to solve document management problems. And we're working with a company in Japan called Kaula, Kaula, and they are looking to put social security records and actually create cryptographic proofs of social security records on Factom in Japan. And DLOC, who's looking to secure and manage documents in many places in the world. And there's probably a few others.
Wow, the future of blockchain, we're witnessing it here, and you guys are on the forefront, and I congratulate you guys for that, and good job. So if people want to learn more about Factom and the Texas Bitcoin Conference, Paul, just give us some final closing words here and where they can learn more about some upcoming events.
Okay, well, the Texas Bitcoin Conference is going to be held at the Canyon View Event Center overlooking the rolling hills of Austin on October 28th and 29th. The pre-conference party that we have on Friday night on the 27th will be at the Drought House on Medical in Austin, one of the oldest pubs in Austin. They do their own brew, and they have all the Austin brews on tap. There's extremely limited parking, so use your ride-sharing technology to get there. And that's our advice, but there are some places where you can find to park around it. And that's going to be a ton of fun. We have a lot of great speakers. We have Ed Rush, who's a dynamic former F-18 pilot who's talking about disrupting the world through cryptocurrency. And we've got Bruce Fenton. We have Jeff Borwick. We have just a ton of speakers. We don't have time to go through them all. We're going to be covering the Bitcoin drama. We're going to be covering the technologies and why they're important. We're going to cover how you invest in these technologies, whether you want to invest labor, money, time, whatever. And we're going to talk about the legalities. We've got a Russell Long, I believe is his name. Ooh, hope I got it right. In any case, a former Department of Justice and other agencies attorney who will SEC to talk about the legality of ICOs and some of the stuff that's going on there, and just a ton of other things. We even have a secret workshop. We won't tell you what it is. I will tell you it's completely not related to cryptocurrency, but relates to a talent that almost all of us claim we have to have in our lives. And it'll be a whole lot of fun. And I really encourage people to get your tickets because it looks like we're going to be selling out. We only have about 400. The venue only holds about 400 people. And so if you don't buy your tickets, then we run out. there's not much I can do for you. So you want to buy those tickets as soon as possible.
Well, it's going to be a great event, and I look forward to being there. Paul Snow, everyone. Paul, thank you so much for coming on with me at Crush the Street. I appreciate your time, and I look forward to being at the Texas Bitcoin conference with, it sounds like the greatest minds in the world focusing on blockchain. It's just such an exciting space, and it's attracting really some of the greatest minds in the world. That's one of the things that I've noticed here, interviewing people in the blockchain space and just seeing the developments happen. It's very exciting. So again, thanks for coming on Crush the Street.
Oh, well, thank you for having me. I really enjoyed being here, and I really enjoyed talking about the stuff I love and the stuff I'm doing. And that's the same thing. and I do appreciate the opportunity to talk to you.